What's up everybody, CryptoVatsik here with another technical analysis video for you today. If you enjoy this content, I would really appreciate it if you gave this video a like, and don't forget to subscribe to the channel. None of what you're about to see is considered financial advice, they're just my opinions. I've got a really exciting one for you today, so you don't want to miss it. Let's go. Okay, today I'm going to be covering VRA, otherwise known as Verasity. And this is considered a small cap coin at around 72 million market cap at the current moment, with a fully diluted market cap, meaning if the circulating supply were to be injected into the market, that diluted cap would be 772 million, with a 24-hour trading volume at 77 million, which is actually higher than the current market cap. So a crazy amount of volume currently being traded on this one. Its current rank is 299, with only about 9% of its supply circulating at the moment. So without further ado, let's get into the chart. So the current price of VRA is currently sitting under a cent, with its previous cycle all-time high being right around 9 cents, just under. So as always, I'm going to first mark out those key high time frame levels. We are on the monthly chart right now. So the first level I'm going to mark out comes from this low back here in February. The next key level I'm going to mark out comes from these three lows over here at about 009 or just over. And we will mark out this deviating candle wick here as well at about 0075. We'll make this one a bit lighter. Now getting a little closer into the current move. Back when we had this major doji candle in July, we're going to mark out the low of that candle. This level established definitely an area of resistance, with these two candles fighting to break above, but ultimately failing, bringing us back down to our low. And then of course, we're going to mark out our bottom that we've had here as well, which you'll notice stems all the way from back here when we had this large wick to the upside of this candle in February 2021. It ended up actually marking our current bottom. So we saw a full round trip from when we had that breakout in 21 to all-time highs, and then round tripped all the way back down to that breakout level. Okay, so now that we've got our key high time frame monthly levels, let's zoom into the weekly. Okay, so right off the bat on the weekly chart, you're going to see some really nice respect with these levels with the current price action that we're seeing. So back here when we had this July bottom form, we had 3 taps of this level here in the solid line with a deviation wick below down to the dotted line. This candle fought its hardest to break out below this level, but the bulls fought to really close this candle above with a major wick to the downside, which yes was ultimately lost, but clearly demand fought to hold that level. Then definitely some interaction with the dotted level here, okay, from this low in July, the ultimate bottom there, with another tap of it as resistance here, and then this July monthly level here with that low, with a bunch of interaction here and that bearish consolidation that we had, really fighting to attempt to maintain it, but swiftly rejected down to our bottom. So now that I'm confident with these current high time frame ranges, we can start to get into further what we're seeing now and look at some of the different scenarios. So clearly the current bearish trend that we had has now been broken, and there's been a reversal. But it doesn't necessarily mean this is the cycle bottom and that we're going straight to all-time highs. It means that we're getting a very nice rally, but depending on which lower high you compare, in my opinion, we could still just ultimately be making a lower high, despite how massive of a short squeeze this has been. So the clear weekly market structure break that we had came from this lower high. And not only did we break that lower high, but we've now broken this lower high as well. So it's been a very nice rally, and we could still see some further bullish. But I think ultimately, until we break this major lower high on the weekly that we had back here in August, I still think it's bearish on a high time frame perspective, because this was really the last major rally that we had, or arguably the only rally during the bear market that we saw. Whereas I'm not so certain to categorize these pushes here as actual rallies. They are definitely areas of temporary relief, but personally my bias is that until we break this lower high from this rally, that we are still in a bear market, or we've began to enter the accumulation phase of the cycle. If we were to get a weekly candle close with confidence above that level and start consolidating or respecting it as a new area of support where the candles look something like this, then I'll consider myself invalidated and expect a much larger push to the upside towards this monthly level that we had marked out here. That comes from the February low. So something like that, filling in some of this void from over here. But until that happens, I'm ultimately just viewing this as a bearish underside retest of resistance. Okay, let's drop down to the daily now. Okay, so again, you'll see some nice respect with those monthly levels that we had marked out, either acting as resistance, support, and resistance again, consolidating, etc. So these will be important when we start looking at the lower time frame in a second. And quickly, before we get into currently this move, I just want to mark out this swing fail here as well. We had a tap of resistance here with a major wick here again thereafter, and then continuing to try to hold this trend with our swing fail right here. So an area of interest for me on the lower time frame derived from this swing fail that I want to mark out, and we'll make that dashed. So now we're still on the daily, just some really interesting things on the candles that I've noticed as well proceeding up to this move is you're trying to identify those market structure breaks in trends. So you got your lower high after lower high, a breakdown level here off of this lower high. We chopped around, continued to dump, continuously making lower highs, and then another breakdown level here from that lower high, and then arguably on low time frame this high as well on this major doji candle that formed our bottom when we had this consolidation zone right here that ended up being our trend reversal. So you'll just notice that all the way up we were breaking market structure. We were breaking bearish market structure with this bullish trend starting all the way from down at the bottom here. This lower high broken with this candle close above the level. I'm going to ignore this wick for now with our retest on the upside of that level. We're on the daily, so it's a bit tougher to see, but if you zoomed into the 4 hour, it would be a lot more clear, which we will do in a moment. We had our next market structure break from this previous lower high with our candle close here, smashing above the level and wicked all the way down on the next candle, retesting that market structure break. And then again, getting out of this valley, so to speak, from our last major lower high right here. Ultimately, this area of bullish consolidation on some lower time frame that led to the power move next. Okay, so that's all fine and great. Let's get rid of these levels now. I really like candlesticks as well, and I just want to point out some really cool candles within this move. The only two red candles, arguably, with this bullish trend are right here and right here. And they're very powerful candles. This one being an inverted hammer, a huge long wick to the upside, and actually closed red, signaling that there's major buy pressure and demand pushing into supply, and the demand continued despite that sell-off. So a very powerful candle showing the amount of sell pressure, but vice versa, not able to suppress price under resistance. So a huge inverted hammer candle. And then the next up, the next red one that we had was just your classic hammer candle, signaling a powerful move to follow. So just really interesting to see and wanted to point that out. Thought it was pretty cool. So now getting into the current move. If you're looking to get involved on this move or on this coin in general, there's a couple different ways of looking at it. It's very possible this move is not done yet. And so if you're looking to trade it, we'll zoom in into the lower time frame chart and I'll show you exactly how I would do that. But if you're like me and you're looking for long-term bags to accumulate as well on this coin, then I'm going to start off with that strategy. So first, I'm going to mark out this range that we had formed from the 18th and the 19th daily candles here. And you'll notice within that range was this level that we had marked out in the dashed line here from that swing failure pattern. So for me, this is that higher time frame market structure break, just like we covered down here, these lower level market structure breaks. But this was our last macro high, in my opinion, that we've now invalidated the bearish structure of. And it lines up as well with this monthly level that we marked out here from back in July. So for me, looking long-term positions that I would want to hold over the next year or longer, I'm really interested in looking at getting in closer down to that breakout level. I think it could take some time before we see it, even if we continue to push higher, but I think that's an area that will get retested in the future. Okay, now let's zoom back into this range here. We'll drop down to the 4 hour. So you can see some really nice respect with that monthly level that we broke out of, as well as the swing fail resistance in the dashed line here. So this formed a range of sorts with our range high up here and a range low down here. A very brief moment of bullish consolidation at resistance that flipped it now into support. So for me, like I said, even if this continues to push higher, I'm interested in long-term bags closer to that level. Despite how powerful this move has been, I still think that it's a short squeeze that is going to enter a zone of accumulation or a phase of accumulation that we typically see at the end of bear cycles. If you don't agree with me and you think the bottom is in for sure, and this is our first major impulsive move of a bull market, then my trade plan would still work because I have an added piece of confluence, which is pretty simple. So assuming this is the high of this next leg that we've got here, that will complete this first impulsive move off of the bottom, meaning our wave one of a major 5-wave structure, then you'd be expecting a retrace off of your wave 1, likely down to the 618 fib. If it's extremely bullish, then typically you see the 382 revisited, but more often than not, the first major impulsive move after a bear market retraces to the 618. For whatever reason, if it's PTSD or people trying to short, they still think it's in a bear market, whatever it may be, that's typically what you see. But like I said, I'm more leaning towards this turning into an area of accumulation, where even if we push up further, that I still think we have some accumulating to do into Q3 2023, or this is just a short squeeze that does fail and comes back down to the lows. But again, I'm still only interested in here. If it goes lower, I'll get in lower as well. But I think at the least that we still have this area to revisit still. And like I said, I'll be invalidated on a weekly candle hold above red. And that's fine. At least I know where I'm going to be wrong. Okay, so let's get into now, if you're not just looking to accumulate this and you're potentially looking at just trading. Let's drop down to the 1 hour now. Okay, so we got a nice rising channel on the 1 hour here. Okay, a beautiful rising channel. So if you are looking to trade this, I'd be watching for an H1 break of market structure, which would be a break of this rising channel. This is a bullish trend. I'd be closely watching for a break of that trend with a lower low for a retracement of this overall leg. And depending on your Elliott wave count, possibly a 1, 2, 3, 4, and 5, meaning you'd be looking for a retrace of this, targeting these previous highs over here, this consolidation range that we had near the 618. That would be a potential short target. Otherwise, if you're bullish and you think this has more left in the tank, looking at that area for a long, that was clearly previous resistance flipped into support. The vice versa is if this rising channel holds and breaks to the upside. You know, if it continues to respect this channel, you could take a position, stop loss below the previous low, target the high from this wick over here for a short-term trade. This ascending triangle that we had here, its target has come to completion with this powerful bullish candle right here. So a little bit risky up here looking for longs. When you zoom out and you start looking at the grand scheme of things, it's late in my opinion, so I'd predominantly be looking for shorts. But it doesn't mean that this couldn't push higher. If we do flip red, then I'm looking up here at that previous level. Like I said, if the short squeeze is not over and we do in fact flip red, then I'm looking higher at 009. But we've got this large wick that we're starting to just fill in right here. So that makes me a little uneasy. So for me, predominantly, I'm just going to be being patient and start to wait for that major correction down to that level, like I said. So just quickly flipped down to the 15-minute chart here. So low time frame. Again, you could just trade this rising channel. It's currently sweeping liquidity, took out these lows. So running some stops with this low, retesting the bottom band of the range. It looks like it possibly flipped this triangle resistance into support. However, looking like a bit of an SFP right here, which was a failure to continue the trend to the range high. So if you're willing to take on risk here, ultimately you'd be looking for longs near the bottom band, targeting the range EQ, and flip of that targeting range high, which even though we're on low time frame doesn't look like much, is still a 6%, 6.5% move to the EQ, or roughly a 10 to 12% move to the range high. But like I said, I'd be closely watching for a break of that lower band, bearish retest, and down for a short. So it just depends what it's going to do. You got to play price action with what you see in front of you and try to keep emotion out of it. Anyways, guys, I think that's pretty much it. This will wrap up this video for today for VRA. It's been a very powerful move indeed. There's been a lot of talk about it online lately on Twitter and so forth. So I think that it's an exciting one for the next bull cycle. It's caught my interest. I'll be looking to accumulate it, but I'm going to be patient. I'm going to wait for my targets to enter as I do with any other coin. And if I'm wrong and I get invalidated, that's fine. I'll just have to buy higher. That's the name of the game. Thank you all very much for joining today. I hope you enjoyed the video and I hope you found something helpful here. If you're interested in this coin long term, or if you're looking to trade it, whatever it may be. Thank you again for joining. Let me know what you think in the comments. Please give the video a like. Don't forget to subscribe to the channel. And as always, you can follow me on Twitter at CryptoVatsik. We'll see you on the next one. Peace.